Hi guys, it's Jack and welcome back to another video. In today's video, I'm super excited for it. It's going to be another penny stock review and analysis, and the company or stock that I'm going to be going over today is actually one that's been crushing it over the past month. They're up almost 50% in the past month alone, but even after this rapid growth, I still think they are undervalued at today's prices. And this is a company that actually just made a huge pivot in terms of their business model, which I really think is going to set them up for success and growth for years to come down the road. And for this reason, it's actually my latest investment in my own personal portfolio. So without further ado, let's dive into the video. So the company I'll be talking about and reviewing today is called Data Communications Management Corp, and it trades under the ticker symbol DCM on the Toronto Stock Exchange. So it is available on platforms like Wealthsimple, which is great for us. The company has a super cool background and story. It's actually a company that's been around for over 60 years. They are one of Canada's largest printing companies, which I know seems a little bit boring. How come this one is going to be growing for years to come? But just recently, they've made a huge pivot from being a print first company to now really being technology driven and technology enabled. And this shift has really allowed them to become Canada's largest marketing and communications provider across the entire country. They have an absolutely killer client list. They actually have over 70 of Canada's top 100 largest companies on their client list, which is amazing. And recently, around 3 to 4 months ago, they brought on a new CEO that is really turning this business around and helping to drive that pivot from being a boring printing company to an exciting technology driven marketing company. And this is really the shift that I think brings value to investors and shareholders today, because the company is currently trading around a 5 PE ratio. Yes, you heard that right, around 5, which I think is extremely undervalued for what this company offers and its business model moving forward, which I'll get into in this video. So in this video, I'll really dive deep into Data Communications Management Corp, and I'll go over their business model and what exactly it is that the company does. I'll kind of explain how they've pivoted from that print first company to a digital first company, which I mentioned. And then I'll start to get into the management team and go over the new CEO, which I think is a huge plus for the company, who has really awesome previous background experiences, which I think is going to help grow DCM moving forward. And then I'll also break down into some of the numbers. We'll get into the financials. We'll jump into their revenue as well as the financial statements, kind of look over the balance sheet and how the company is doing in terms of their assets and liabilities, the debt on their books. And then we'll dive a little bit deeper into the stock chart, maybe do a little technical analysis, look at a few of the past trends when it comes to DCM and their stock price. So a lot of fun stuff in this video, but let's dive right in. Hope you guys enjoy. So Data Communications Management Corp currently trades at $1.47 per share, and it's actually up 12% on the day of the time of filming this video. I'm filming this video on Friday, so the price might be a little bit different when you're actually watching this video, so definitely double check. And you can actually see that the market cap of the company is at $65 million. So this is a fairly small company. And the share price has been going up so fast that the PE ratio is actually 6 now instead of 5. And quickly looking at the 1-month chart for DCM, you can see the rapid growth that this company is seeing in its share price. Over the past month alone, it's up over 50%. This one has been consistently going up and up and up over the past month, which is great to see. It's really starting to get some good upwards momentum, and volume is also starting to rise as well. But before we dive too deep into the share price and how the stock has been trading, let's first go over the company and what it is DCM does. So DCM actually has 3 different revenue and business verticals. The main one, the one that's been their core business for over 60 years, is the conventional print solutions, what they call DCM Print. And in 2020, this actually brought in $178 million in revenue. And this revenue really comes in the forms of so many different printing solutions, whether it be thousands of labels for certain products, whether it's a financial institution that needs thousands of bank statements sent out. It could be flyers, newsletters, you name it. In terms of a printing solution, DCM does it. So again, the printing part of DCM's business actually brings in $178 million in revenue, which is their largest chunk of these 3 business verticals. However, the industry compound annual growth rate for printing solutions is only 2.24%. So you can see that it's definitely not a high growth area. And for this reason, DCM has undergone a huge pivot where they're utilizing their pre-existing business, but leveraging it using technology, which gave way to their second business vertical, which is a technology-enabled marketing workflow. It's basically a one-stop shop for the clients to come in and meet all of their marketing and print needs. So it includes print on demand, so the client at a click of a button can customize their product to their needs and have thousands or hundreds of thousands of printed on the spot. It also offers marketing solutions so that they can customize ad campaigns and run them through email lists or whatever the case may be. And it also has business outsourcing. So if clients that are really complex have hundreds of different vendors that they go through for their business needs, they can actually run this through DCM, and it brings down the number of vendors they need to use drastically from hundreds of vendors to maybe 5, 10. So a really big impact, and it really brings down costs for the clients and saves them money, which is the huge perk for DCM. And this platform or business vertical is also known as DCM Flex, and it brought in $78.6 million in terms of revenue in 2020. And this has really been over the past year or so where DCM has been focusing its efforts and migrating its clients from its conventional print solutions into DCM Flex to really get all of their needs taken care of in one place. And the exciting thing about the technology-enabled marketing workflow and DCM Flex is that the industry sector compound annual growth rate is actually above 15%. This is a much faster growing market, and DCM management really wants to continue to grow DCM Flex. In 2020, it made up 32% of their total revenues, and the goal is for 2022 to have that up to 45% of revenues, and then by 2025 have it make up 75% of revenues. So really focusing on transitioning their clients over from the conventional print solutions into the technology enabled and technology driven DCM Flex. What gives DCM Flex the competitive advantage over their competitors is how customizable it is. The platform is actually fully customizable to any client's digital ecosystem. It has over 70 integrations built in so that the most complex of clients don't have to change anything on their end. Whatever they are already using as a business will work with DCM for the most part, and this really allows DCM to capture really large scale enterprise clients, which they have done, and it truly just has so much flexibility. Maybe that's where they got the name DCM Flex from. As on screen you can see just a few of the integrations that DCM Flex is integrated with. The list goes on and on. And again, it's that flexibility that I mentioned that allows them to go after these large enterprise clients and get them. You can look at the amazing client list here on screen of DCM. Such a diverse range of clients from big financial institutions, big retailers, healthcare, as well as the emerging markets. You have 80% of North American cannabis companies are working with DCM, and many more clients. They have over 2,500 clients, which 93% of revenue comes from their top 250 enterprise clients, and they have a 97% retention rate when it comes to those enterprise clients. So once they land a huge client, they're most likely staying with them for the long run, which brings future revenue that they can just build upon as they acquire more and more clients moving forward. Here's a video showing kind of how DCM Flex works and a use case with a big financial institution.
DCM Flex is our content development and e-commerce platform for managing entire enterprise programs and assets. FIs can produce and distribute collateral on demand by location, region, or nationally. Users can easily customize and update branded assets. Ordering is simple and seamless, whether it's a run of 10 or 10,000. Built-in and customized reporting generates decision-driving analytics. The top financial institutions in Canada trust DCM.
So that was DCM's second largest and second business vertical, the DCM Flex. So now it comes time for their third business vertical, which is their digital asset management service. And this is another technology enabled service. And the name explains it a bit, but what a digital asset management service is basically it gives you the ability to upload and preserve any type of digital asset, whether it's a video, photo, a presentation, you name it. You can upload it to DCM service, which is called Assemble, where you can manage your digital assets however you see fit, whether it be archiving certain assets, building new ones, version control, and things like that. And then from there, you can share and distribute it as you will. So you can really make sure that the right people in the right places have access to the digital assets that they need to do their job, which is really convenient, especially if you're a large enterprise client where maybe you have hundreds or thousands of different locations of stores across different countries where it speaks multiple different languages. You're going to want to make sure that people are using the same assets, making sure that there's unison across the business. So the digital asset management service is DCM's third business vertical, and it's currently their smallest business vertical, making up only $3.4 million worth of their revenue in 2020. However, the industry is growing really fast. It's expected to be a $5.2 billion market size, and the compound annual growth rate of this market share is around 21.2% every single year. So it's growing really rapidly, and it's estimated that only 1 in 10 companies currently are using a digital asset management solution. So they're really hoping to see that revenue stream really grow over the coming years. So shifting things over to the management team of DCM, they have an absolutely killer management team with everyone pretty much having over 20 years of experience in their relative fields, which is awesome. And there's definitely a key focus on technology backgrounds, which I like to see as they move towards that shift of being a digital first company. And really the CEO, Richard Kellum, who started at the company 3 to 4 months ago, really leads the way in terms of experience. He's had 35 years of experience as an executive to help grow and scale companies such as Wrigley, Molson Coors, as well as Goodyear. And he's really one of the visionaries behind moving DCM and pivoting from a print first company to a digital first company, making sure they're set up well for good long-term growth for years to come. It's also worth mentioning the ownership breakdown of the company. So there's actually 10.3% held by insiders and then another 31.1% held by directors and officers. So this would be people like the CEO and other board members. So combined, that's over 40% of the company that is held by people who are either managing and running the company or insiders. So a lot of skin in the game for the people who are actually running the company, which is good to see as they have a lot of money on the line as well, and they want to see the company succeed. So hopefully that shines a little more clarity onto Data Communications Management Corp and what exactly it is that they do, their business model, and kind of explained that pivot that they've made from a print first company to a digital first company. And not to mention the brand new CEO, Richard Kellum, who just came on 3 to 4 months ago, really has a clear vision in mind of where he wants to see DCM go moving into the future, and has really helped positioning them and making the business fundamentally better to bring more value to their clients, which I think is just going to help this company grow moving forward and really achieve higher revenue numbers and better margins. So that leads perfectly into the next part of the video, where I'll dive into the financial statements. We'll go over things such as revenue, profit, and really show how the company has been focusing on reducing debt. So they've actually been reducing debt like crazy over the past little while, and we'll jump into all of these numbers. Let's dive in. So looking at DCM's numbers over the past few years, we can see in terms of revenue in the top left, you can actually see that 2018 was the top year for in terms of revenue numbers at just over $300 million in revenue. And then in 2019, it was a little bit lower at 282. And this was due to the fact that DCM was a little bit slow to shift and move towards technology and really technology enabling their business. And then in 2020, we know what happened in 2020. The pandemic struck. And think about it in terms of a company whose major business vertical is their actual print solutions still. There's not going to be as many things being printed and used in terms of marketing campaigns and things like that. A lot more things were moving digital. So it did help in terms of seeing DCM's shift towards technology. However, the revenue still took a hit, and the 2020 revenue numbers were at 259 million. So even though 2020 revenue numbers were down, what I really like about DCM is that they took into their own hands what they could control and not the external factors going on in the world that they couldn't. So if we look at gross margin, they've actually been able to increase their gross margin, so their profit margins over the past 5 years. And in 2020, that was no different. Even though revenues were down, they were actually able to increase their profit margins by the largest percentage of the last 5 years. And in terms of total debt, they've been paying off their debt like crazy in 2020, pretty much halved their total debt from the previous year. And in 2021, that has just been continuing, which I'll show in a second. And in terms of adjusted EBITDA, you can actually see that in 2020, their adjusted EBITDA was the highest it's ever been, just over $40 million. And even in terms of their 2018 year, which was their highest year in terms of revenue, it was actually even a higher adjusted EBITDA in 2020. So this really shows that DCM has been focusing on making their business better at its core and focusing on being a more efficient and better business. So comparing the income statements from the previous few years, and then we can also see that SG&A, which is selling, general, and administrative, which is basically the expenses of the company. In 2018, it was $66 million. And in 2020, it was $58 million. So that's around a 15% reduction in the expenses to operate the business. And if we scroll down to net income, we can actually see again that 2019 was a rough year for DCM. However, in 2020, they were actually $11 million in profit. And that's what puts the PE ratio between the 5 to 6 range. And really that positive net income is because of the hard work DCM's been putting in, reducing debt like crazy over the past year, reducing operating costs, and increasing those profit margins. All of those combined are really making DCM a much more profitable business moving forward. And the first quarter 2020 numbers also show that the company is becoming more and more efficient. Revenue is slightly up around 3%. Gross margin is now around 30%. And SG&A costs are reduced by another 10%. And then debt reduction has continued as they've reduced $7.2 million of their debt. It's down 14.9% overall, and that's just in one quarter. So now that we've looked at the financial statements, let's take a little bit more of a sneak peek and have a little bit more detail in the actual stock chart of DCM and see if there's any trends or patterns we can see historically. So just a reminder, the ticker symbol for Data Communications Management Corp is DCM, and it's currently trading between the $1.40 and $1.50 range at the time of filming this video, and currently has a PE ratio around 6. DCM is really starting to get noticed by investors. You can see that down at the bottom here, the volume was very low at the end of May. However, in June, it's been ramping up extremely well. There's a lot more volume, so a lot more people are actually starting to notice this stock, which is great. And over the past month, it's gone from 90 cents per share to where it currently stands around $1.40. So an over 50% increase on the month. And over the past 6 months, we can also see that there's an upwards trend, as it was trading actually as low of around 56 cents a few months ago in early March. And that's around the time that the new CEO, Richard Kellum, stepped in and joined DCM. So just by the looks of the chart, it looks like the new CEO is doing a great job in his first 3 months at really shifting this company. And it's looking like investors are starting to notice that. Again, I'm not saying that that's 100% why this stock is starting to trend upwards. I think it has a lot of things going for it, which is why I'm personally investing into this company. Even after this crazy growth in share price over the past month or two, I still think this is an undervalued company at a PE ratio of 6. I still think it's being priced and evaluated as if it's purely a boring print company. However, it is now much more than that. It's more of a technology company in my eyes moving forward. And if we look over the past year, we can again just see how the stock is really starting to gain momentum. And it looks as though others are also seeing this as an undervalued company and have been buying in. It is worth mentioning the 5-year chart, as you can see that, as I mentioned in the revenue numbers, 2018 was its top year. And then in 2019, it had a really rough year. So you can see that the share price directly correlates with that. 2019, it starts to drop off, and it really consolidated in 2019 and early 2020 around 20 cents per share. So just imagine if you'd gotten in there. In my own personal opinion, and it's just my own opinion, I think DCM is anywhere from a $2 to $3 stock over the next few years. So it's one I'm super excited about moving forward. So there you have it. That is my review and analysis of Data Communications Management Corp, ticker symbol DCM. This is one I'm really excited about moving forward. I think it's a stock that people really just haven't picked up on yet because it was for the longest time just a kind of slightly boring print company, but it's now, instead of a print first company, it's now a digital first company, and it has such a wide range of solutions that allows it to target those huge A-list clients. They really just have so many things going for them right now. I definitely am curious to hear your guys' thoughts on Data Communications Management Corp, DCM. Let us know down below in the comments what your thoughts are. I hope you guys enjoyed this video. If you did, smash that like button and make sure to subscribe to the channel. A lot more content is coming your way. I'll see ya in the next one.